Hi everyone, welcome to the webinar, What is Investment Grade ESG? We're happy to have Ragnar Martens, Director of IT and Analytics at GRESB, and Matt Ellis, CEO of Measurabl, speaking with us today. We'll be diving deep into the subject of what investment grade is, what is ESG, and why all of this matters. A few logistics to go over before we get started. All of the attendees are automatically muted during the presentation. We'll be going over questions later in the webinar, so please submit all of your questions in the Q&A panel. We'll get through as many as we can and follow up via email with any that we don't have time to go over. So with that, we'll go ahead and get started.
Great, thanks Kaylia. This is Matt Ellis. Welcome everyone, and certainly Ragnar for sharing your time and your insight with us this morning. Ragnar has a number of slides prepared for us. We're going to kind of turn him loose to, I really think, lay the groundwork for the subject matter. In my opinion, having watched GRESB for the last several years and being a partner to them, they have thought deeply and expansively about the subject of investment grade and just data quality, not the same thing. The latter leads to the former. So they really are the experts here and the right people, in particular Ragnar, to take us through the issues. What I'll do from there is I'll follow up, I think, also Ragnar with some questions as we go, and then also some additional thoughts from our side as an IT and ESG reporting company. We spend quite a bit of time here as well. Have done some data science work and some analysis that we'd like to share with you all, and that'll form the discussion today. So Ragnar, without much further ado, if you would take us away.
Yeah, thanks, Matt. Yeah, I would like to keep this as conversational as possible. So just to start, I would like to just go back and look at one of the graphics that we at GRESB have been using for many years to explain what we do, pretty much. It's one of the stable graphics. And without going into too much details, what we've seen over the past 9 years is that the capital markets provide a very effective top-down push towards a bottom-up commitment regarding sustainability practices. And those sustainability practices is what we assess at GRESB. So we score and benchmark them to then inform both the investors and the companies that they invest in. And the reason why we're having a conversation about data quality and why it's so important is that we define the standards together with the industry, what we measure this performance on. And to give everyone a little idea on the, can we get the next slide? On why this is so important is we've seen pretty much a continuous growth in the last 9 years in terms of participation in our assessment. And as such, to give an idea about the scale, we cover more than 50% of listed real estate in every major market. And this is a slide from 2017. You can see that in Europe, we have the majority of our participation, but in terms of capital allocation, it's really from North America where we see the most influx. And then when we have a conversation about this kind of global scale, we need to also have a conversation about data quality the moment we assess those standards. To give a little bit of a better idea even of that scale, if you could go to the next slide, we currently serve about 70, almost 80 institutional investors that provide capital for property companies and real estate investment funds. And this year we have more already, I can share this much, more companies than ever before. So last year in 2017, we had 850 companies that provided their data. This year, it will go more than 900. So the scale is just increasing. And finally, those companies, they have combined more than 80,000 buildings, more than 80,000 assets that they need to collect data for. So what kind of data do we collect on these buildings? Next slide, please. We look at the environmental performance of the building. We look at the geospatial data, so where is the building located? And we collect some other information points about these 80,000 assets pretty much. And that bears a variety of challenges. Next slide. And these challenges pretty much manifest themselves in making sure that we have a high quality of data that we can properly compare, that data collection happens automatically, and through that we reduce the reporting burden for our participants. So those challenges are some of the things we face at GRESB, and the main one that we mention here first is really is data quality. We collect this data from, next slide please. We collect this data a lot through companies like Measurabl. So we have about 30 external data partners that help our participants to collect this data. And then we supplement it with other spatial data. And we also are connected to 70 to 80 certification rating and databases. We have APIs with them through which we then collect building certification data that supplement our already collected environmental performance data. That data flows up, next slide, from the companies and funds that we assess, from the buildings all the way down from the meter. We can go to the next slide. And the meter information plus the values that are calculated, such as waste data or carbon data, in combination with the other building information, that's the data points that we want to talk about today, where we have to ensure that data quality is met. And we're really grateful at GRESB for having a lot of data partners that are very, from a data science perspective, we can go next slide, advanced to serve this data. But yet there are a lot of standards out there, and there are a lot of different ways this data is collected. And what we want to have today is pretty much a conversation about how we can move all together as an industry to a place where we can all trust that the data that was collected on the building level is collected in the same fashion. To ultimately go back to our starting slide here and say, well, yeah, that's really what we need to both inform the investors that they can trust that the data that they get from GRESB, that they know the sustainability practices and the performance of the companies and funds they invest in is accurately assessed. And also for the companies themselves to get informed about how they stand in relation to the market, so they can trust what they get on their screens. And yeah, I would like to leave it at that for now. I will share a little bit, some more graphics of actually how at GRESB we look at data points that look abnormal to us. And would like to give the word to Matt for now.
Great, thank you, Ragnar. And we'll stay here for a little bit and maybe even work backwards across some of Ragnar's slides and try to expand this now, because Ragnar's laid a foundation for what is GRESB. It's a system for providing scores and benchmarks to portfolios of real estate around ESG, environmental, social, governance data. Institutional investors, lenders, and other real estate stakeholders, like insurers, for example, rely on ESG data as part of their investment decision-making or transactional decision-making process. And we all know the old adage, right? You can't manage what you don't measure, and these other ones around garbage in, garbage out, right? So it's critical for us to be able to deliver the scores and the benchmarks and to have the confidence that they're founded on genuine and high quality data, right? So actually, I'd love to back up. Let's see if we can find the slide. One more here. Let's hang out here. And Ragnar, we were talking on this slide about really where does the data originate? And before we say and kind of walk through this flow that you really well laid out, I just want to define for the audience, what are the data points that comprise ESG in real estate? And I think GRESB is a great and probably the best proxy for that. It's absolutely, the E is the environmental, and Ragnar pointed out here that a lot of that for a building comes from its utility meters, energy, water, The carbon for a building is derived from the energy performance. It's just a function of that. You also have waste. You might not think of that as a traditional utility meter, but it, for all intents and purposes, behaves like one. We have bins outside buildings. They get pulled on a certain regular basis. So just there, if we think about this relatively small slice of the whole ESG pie, and a meaningful slice of the E component of it at the utility level, you start to think about that and go, wait a second, you're suggesting that 80,000 buildings with probably millions of utility meters, many of those meters are not even under the landlord's control, they're under the tenant's control. We're suggesting that we actually are able to get that data. Anyone in the energy business or in the property management business here who's had to deal with the utility bill or paying a utility bill knows that those bills are very unreliable. There's gaps, there's overlaps, there's frequently bill restatements, there's abnormal readings. Ragnar, can you talk a bit about just at the meter level, getting data coverage, ensuring good data quality, and how you guys think about that?
Yeah, sure. I think that to give a good analogy of where this data comes from is when we collect all kinds of information about these companies, we validate that data, right? We look at if someone tells us they have a sustainability policy, we are working with a third party to actually have a human being put hard labor into this and have a human being look at this policy and assess whether this is a solid policy or not. Now, on the energy and water information, we pretty much do the same through a way that we say, well, you have to report this information not just for your whole building, but for different spaces, for not for your different meters. And since 2 years ago, you can also report that data on the individual assets. So a lot of the companies that report this data to us, they go through a long and hard process to collect all this meter data and put it into our system. Now, that's already an abstraction from the data where it comes from the meter, and it's not an automatic process. So there is a challenge for us to ensure that the flow of data is as accurate as possible.
Right, and we'll probably have a chance, Ragnar, to talk more about that quality assurance process, meter level and onwards as we get into some of these other slides. But it's interesting, and my goal here to kind of probe this area of the puzzle is to get everybody thinking about, well, where does ESG data really originate, right? And if we are able truly to reasonably capture all of that and reasonably report and roll that up, are we all there? Are we there in certain markets or certain asset classes like office, which tend to have higher rates of control over the meters and therefore higher rates of data coverage? And is that reasonable to expect then also of, say, an industrial facility or logistics asset? And then you have, flipping kind of to the other slide of this, or side of this slide, the other building information. And this is actually, Ragnar, one of my favorite parts about what you guys at GRESB do, which is ESG, right? And to really get that total picture of the asset and then ultimately the portfolio, we don't need to just know utility and meter data at all, right? We need to know things that you'd point out, like, is this building certified? If so, to what standard? When was it certified? Is it still a relevant certification? So for example, LEED, Energy Star, BREEAM, BOMA, Neighbors, Green Star. There's 601 different green building certification programs around the world, all of which have a different methodology and approach to defining what is green. And GRESB is recognizing, Ragnar, I'm going to say, I think it was between 30 and 45 different standards. Please correct me if I'm wrong, but a large number of the most meaningful of these, and saying, hey, that is also relevant of sustainability performance. And when it comes to getting things like certification data, you had mentioned that you have a number of APIs. Can you talk about what an API is and how it allows you to fetch building data, in particular certification data, just for a moment.
Yeah, sure. So actually, when we look at the scheme and the sub-scheme landscape, I think we are accepting more than 200 different schemes. So we really have a team that just looks at these certifications and assesses whether we can accept them and whether they cover the topics that we want to cover. But ultimately, companies report them to us, and we can, of course, we can validate these certifications and check how they perform. But our ideal situation is that we get this information through APIs. So pretty much automatic connections to databases of the certification provider themselves. That just hooks into our database. And the moment a user goes into our portal and says, my building has a certification and it's this one, we are able to actually search in the database of the certification provider. And we are lucky to have the two biggest ones, LEED and Priam, in our system connected. And the moment the user says, well, this is my certification, we are able to verify that this is actually a real certification, which in turn provides us with more confidence on the quality of this data point. And I think if we look further, the work that these certifications bodies do goes way beyond what we are able to assess on the building level right now. And I think there is a future where we can say, well, if this building has an operational building certification, why don't we look at the indicator level data, and why don't we pull more of that insight that's already there about the building?
Mm-hmm. Yeah, it would be a nice world, but it's complicated, right? And on our side at Measurabl, we write APIs. These are just application programming interface. It's a way for one system to liaise or talk with another system, right, and exchange data programmatically. We have APIs with GBCI or GBig system, which warehouses lead data among many other certification bodies information, and also the BREEAM database. And one of the things, Ragnar, you and I were in Paris a couple weeks ago, and you spoke on a panel, which I believe was broadly about these same types of topics. And I remember you saying, they ended the panel and they go, well, what would your perfect world, what would one thing that you would want in that perfect world when it comes to sustainability data? And your answer was a unique building identifier. I remember you saying that, and if I try to connect some dots, the reason I remember thinking, man, he is spot on, is when we go to find a certification, people on this call will know very well that you get building addresses, and the building's actually a campus, and there's 6 buildings on that campus, and only one of them is actually certified, but it's in close proximity to another one. And all of a sudden, what we found doing our work was we were putting, or in danger of putting, certifications on the wrong building, putting the certification on multiple buildings within a campus, taking a LEED commercial interior certification and wrongly applying it to the time period that GRESB was looking at. So the devil's always in the details on these things, where it's one thing to say, hey, we can fetch it programmatically, look at the building address and slap the certification on there. But the truth of the matter is that that is actually complicated. And just like with the meter level information, it is easy to double count, misreport, misascribe information. And then if you do that across not just one building, but all buildings, you get a compounding of problems. So my goal with that is just to talk about, where does the data come from? Again, not just at the meter level, but also at the asset level. How complicated is that really to do it once, let alone dozens, hundreds, or even thousands of times before you get to some of these other calculated values, right, which are derivatives of or based on the primary or actual data. So what I'll do here, Kim, if you don't mind, let's move to some of the slides I've prepared, because we're going to kind of try to keep digging in deeper. We just spent a few minutes with Ragnar kind of talking about how do we get data, where does it actually originate? It's worth quickly pointing out that S&G data, social and governance data, to a fair degree, starts to shift away from being procured at the meter or asset level, and instead it's actually procured at the entity level. This would be, say, a portfolio owner, a BlackRock or a Blackstone or a CB Global Investors, who maintains policies and procedures. And those policies and procedures are also part of GRESB's scoring approach. And they face different types of data quality assurance issues. For example, if a policy was in place outside of the reporting time period that GRESB is looking at, it would not count towards their score. But to know that, you really do have to look at the documentation. You have to look at the date of the documentation. Sometimes we're looking at policies and procedures to make sure that they cover the totality of an issue and scoring that concept. And so you're really looking in and parsing words. And at Measurabl, Ragnar, I don't know if you guys have ever wondered aloud about this, but we thought about, well, is there, some AI we can use to parse the text box and try to figure out, is it really addressing all the issues? And so just leaving that out there as a thought, really, but to say, like, at every level, qualitative, quantitative, meter or asset, it's important to remember that data is not just data and simple. Data has a story, it comes from someplace, it has context, and really sifting through all those things to ensure the highest quality and most representative data is brought to bear is a heck of a thing. And so we wanted to use this slide to just take a moment to talk about, okay, if there's this pot of gold at the end of the rainbow called investment grade and investment grade ESG, data quality, that concept, that's the rainbow that gets us there, right? What is it? We talked about what data we're concerned about, energy, and environmental, social, governance, and some examples of that. Let's switch gears a little bit to really focus in on quality. So if we can define what data we're after, well, can we define quality? And Ragnar, for our fun, right or wrong, I'm not sure, but we proposed a framework today that we use at Measurabl, which is really comprised of these first three things. When we think about quality, what makes for quality ESG data? The first is completeness. The data is not complete, can't be high quality. That really works at the meter level. Imagine you have 12 months of meter readings and you only got 5. Is that data complete? Answer is a little bit more complex always. We'll get there. But also at the asset level, do we know all the certifications or all the projects and what spaces those projects were ascribed to? Second is timeliness. If this data is not up to date, is it actually telling us about the asset or the portfolio around which we're trying to make a decision at this moment in time? GRESB is very interesting and somewhat unusual in the reporting standards universe. Typically, they're going to look backwards 12 months. GRESB actually looks backwards 24 months for a really good reason, which is they're trying to understand relative performance, like what they call like-for-like performance. And to do that, we want to look at the same set of assets in 1 year over another year. So the concept of timeliness here needs to include not just most recent, but do we have representative data for the time period around which we're looking? The last one is accuracy. Accuracy is the most difficult of all of these. Completeness and timeliness are really pretty straightforward. What percentage of the information do you have? How recent is the most recent of this information? Accuracy in Measurabl's world is a pure relative concept. So it says, take again a meter reading. Say a meter reading for a data center electric meter is of some intensity. And we look across that asset's meter readings and we say, well, that one meter reading is way out of bounds for what we'd expect this asset. That leads us to believe that it might not be an accurate reading. Sometimes, and oftentimes, unfortunately, we see meter readings at orders of magnitude different than above or below the other surrounding meter readings. And you've got to isolate those and ask questions about those. Now that's within an asset. What about across peers? If you see performance at an asset and at performance within itself looks reasonable, but across other like-kind assets looks completely unreasonable, say for example, a data center in Portland, Oregon, relative to other data centers in the Pacific Northwest, same size, same year built, same weather, you might say, is this asset misreporting, misrepresenting, or doing something strange? We got to look again at that data. So for Measurabl, we think about completeness, timeliness, and accuracy. And for each of these three, and in particular accuracy, we actually tie them to pure relative concepts. So we don't just look at you in absolute, we actually look at you relative to other things like you to see if there's in fact reliability in the data. So let's go to the next slide here. And Ragnar, I don't know if you have any comments on that concept or any points you'd like to make there.
Yeah, sure. I think this is pretty much in line with how we think about this kind of data at GRESB. I think I'd like to add also some topic that's become relevant recently. It's data integrity. When I say that, I mean things like what about the peers, right? Is the data that comes in there, is anyone trying to skew the picture on purpose in terms of misinformation? So that's also something we have to think about. But if we look at the meter level data, this framework pretty much represents our thinking as well.
Yeah, big issues, and I hope everyone on the call is sort of understanding and in some weird way, some perverse way, sort of enjoying this, because it means that the practice and the art of ESG, it to me begins with, doesn't end with, but begins with, do we have the information in a condition that we can then score it, then benchmark it, then drive some action, some energy engineer somewhere, or some broker somewhere, or some lender somewhere, make a decision? That's the question. And there's so much opportunity because what we're seeing in the market is, and nobody knows this better than GRESB, is the institutional investors, the pension funds and sovereign wealth funds, the lenders, ING and Deutsche Bank or Wells Fargo or Fannie Mae, brokerage houses and service providers and property managers. Each of these groups at different levels of maturity on ESG, but 100% of them are using ESG, or at least aware of it as impactful in their business. That's exciting. What it means is if we're really good at ESG, we can create competitive advantage. And if someone is not using it or not using it well enough or not getting the right data quality, they won't enjoy that same competitive advantage. So there really is good news here, which is that there's so much room to be better at the data. And if you can be, you can outcompete. There's a fourth point on this slide here that Measurabl is sort of toying with. We talked about timeless, accuracy, completeness. We then talk about relevance. This one is also a bit of fun. We did a pilot with a large institutional ownership, real estate ownership, multi-fund manager. And we asked them about ESG and these concepts, and they said, well, you're forgetting something. Not all these data points that we're talking about here are actually relevant to us as we make our investment decisions. They were putting their finger, in this case, on water. And they were saying, look, we just have to be honest with you. We get that water is environmentally important. There's no doubt about that. But as a value driver of real estate specifically, we have hesitancy there. We're not ready to ascribe real value to water. And therefore, we don't want the water in our score. We don't want the water in our risk assessment of this asset or this portfolio. And that really opened our eyes, Ragnar, to this concept of relevance, which is that not all data points are relevant to all people, right? And I'm curious, we don't quite have an answer for how we want to deal with this yet today. We really do follow GRESB's lead and CDP's lead and SASB's lead on what's relevant or material. But can you comment on picking and choosing data points, if you will, or what's relevant, how you guys make those decisions?
No, I think that's great that you mentioned that and that you have realized that, because at the end of the day, you have us, right? You have GRESB to define the relevance of which data points the investment community and also the property companies, but what is relevant to them. And I think that's a very important concept to remember, that we don't just want to blindly collect all kinds of different data points for fun. We're collecting them for a reason. We're collecting them because our mission at GRESB is to make assets, real assets, more sustainable. And that's why we can have this conversation about data quality to begin with. So if we talk about what is relevant, or we could also rephrase it as what is material to the entities that we assess, that's always a conversation that we enjoy having with the industry, and where we are happy to then also get the feedback from our partners like Measurabl and the companies that we assess. So yeah, great that you've added this here.
Yeah, it's interesting, by the way, for those of you who pay attention to the bond markets, you'll notice something. Timeliness, accuracy, completeness, and relevance are actually the same four concepts that many of our friends in the ratings industry, traditional ratings industry, the S&Ps, the Moody's, the Fitches, they use the same type of framework. And it would make sense, right, that we would be really no different in our treatment of non-financial data or ESG data. So it's funny that we ended up here, or maybe we wasted a lot of time trying to create our own models and could have just looked across the aisle. But here we are. Kelly, if you could advance the slide. The next thing, this is just a rubric for fun we put out there to be able to talk around the way that, so for Measurabl, what we actually do here is we have two different scores that we go about. One is on the left-hand side, should look actually very familiar, right? It's this concept of performance. Let's get some information in, and let's draw maybe pure relative or absolute judgments, or relative to some shared baseline. If you're familiar with Energy Star uses CBEX, the Commercial Building Energy Consumption Survey, and it sort of benchmarks you and scores you on energy relative to that, right? That's a sort of a performance score. How good are you on a certain thing relative to some other thing? And for us, the food chain that we've been kind of talking about, that really begins at the meter level, there's people on this call that, and I would have to say they're already right, it actually doesn't. It actually begins even at the subsystems, the sub-meters, the HVAC. I mean, where does this consumption or expenditure actually really originate? It's not at the meter. The meter is really a recording of what's going on behind those walls and within that building. So, hold that aside. I just don't know that the industry is really there at all. We're still trying to deal with just good old meter data, but there's a lot there that we can get information on. We start to look at the asset and we go, okay, well, what's happening at the asset? It's getting certified. It might have some energy rating. They're not the same thing, by the way. You can get an Energy Star score. It doesn't mean that you're certified. You can have an Energy Star of 88. Does not mean you're certified at that 88. What projects are you doing? Measurabl's opinion is that these are highly relevant to sustainability and good management, but they might be done by a tenant and not the landlord, and that is interesting because the actor or the proponent of a project does matter. Then there's contextual information like occupancy. If occupancy goes way up because the ownership is doing a great job of leasing out the asset and therefore becomes much more energy intense, there's counter arguments to say that in fact that building is getting more efficient, right? It's packing more people into more shared resources. So occupancy is very important. Certainly the type of the building, the age of the building, and on it goes. And after that level of the asset, we just start to aggregate stuff, right? So we've got meter, we've got asset, and now we're starting to aggregate. That's all a performance score. We masked our actual scores are not 1 to 100, but we put these out there just to give you a sense of you could score this thing if you wanted to. And then there's the much more interesting side of this, which is today's discussion. And that's what we call our trust score, or you might just call it data quality score. We call it trust because we just want to know, how much do we actually believe in this? How much do we trust this information? And you'll see the concepts of timeliness, accuracy, completeness. And we didn't put it all here because this is proprietary, but we tried to just give you an indication of the types of things that we're factoring in. So timeless, what percentage of the data is aging, and then how, by what degree, what percent of monthly meter readings, and a variety of other things do we have about this meter. Accuracy, we do standard deviation analysis. We'll show you some of that here in a second to say, are these meter readings bouncing around in an abnormal way? To show you one example of how complicated and hard this is, many of you in the ownership or management side would use fuel at your asset, perhaps propane. You might get that propane delivery once a quarter, semi-annually, once annually, once monthly. So imagine you had some meter reading that recorded that propane delivery, and it went 0, 0, 100, 0, 0, 100, right? Missed a delivery. If you're not careful, a normal outlier detection would look at that and go, something's wrong with those 100 readings. In fact, they're entirely legitimate, right? And if you are clever, you can detect patterns, not just at that asset, but like-kind assets who tend to consume fuel in a similar way and say, okay, that makes sense. So just wanted to give you an example there of when you're looking at accuracy and completeness, non-readings or 0 readings at the meter level, and then a reading of a large value still does not just mean there's a problem. It might be totally legitimate, right? Let's go to the next slide. So there's a framework for data quality. What Measurabl does is we take data quality, and if you have a certain threshold of trust or quality, then we're going to believe your performance score, obviously, to a greater degree. Otherwise, you could just tell us anything about you and we'd score you, and we wouldn't know one way or the other if it's at all legitimate, right? So it's trust and performance that together to us are a bit of the secret sauce. Ragnar, this is one of your slides, so why don't you tell us?
Yeah, I was just going to jump in. I was just going to say, well, it's the work that Measure has been doing on this end, and I'm actually really curious about what you see out there as well. We've been doing that, of course, on the portfolio level for many years, and we just wanted to give an example of how that works at GRESB. So this is just one of the graphs we use to validate outliers. So we have an automatic outlier detection system. Some of you might have actually seen that and have to explain, why did your consumption exceed this range defined by GRESB, or why did your consumption change from year over year this drastically? And we look at generally the distribution of values across very similar entities, and we see a range of, we define a cutoff range, and we see where that outlier lies. So this one in particular just lies very slightly lower than our cutoff range. And we look at the explanation that our participants give, because as Matt said, sometimes there are really valid reasons for why an outlier exists, and the pure application of automatic systems is also not the answer. We need to learn more about the data, and that's what we've been doing over the past years. Look at what do the data points look like, and then is there a valid explanation for this data point? We have another example, I think, on the next slide, where we look at the change in consumption year over year, where we can clearly see, so we have the change in consumption on the x-axis, plus or minus, and the complete absolute consumption for the previous year on the y-axis. And one of the things we've learned was that as your overall your total consumption increases, you're less likely to have a drastic outlier. It makes perfect sense. It's just the law of large numbers. So we've continuously refined our cutoff points, and we always look at the explanation and the real world scenario under which such a data point occurs. And yeah, I'm just curious, Matt, what do you see out there? What have you learned over the past years that you've been getting more and more data into your system?
We've been seeing a lot of the same stuff. And we've seen a lot of, I guess it's a bit of a Pandora's box here. The deeper you dig, the more problematic it becomes. It's kind of like digging in from topsoil into bedrock, right? It gets harder and harder the farther down you go. And one of the major issues that we see, Ragnar, is this concept of data coverage. So like, you've got energy, you got a building and you got energy consumption, just to use that, right? And you get some intensity by taking that energy consumption, dividing it out by the square footage, to put it very simply. Well, if we don't have the data on the whole building, energy intensity looks relatively low, and you might think that this is a very efficient building. And just that one basic problem is systemic and very hard. And it's earlier on in the presentation, I was describing, data coverage, tenant-controlled meters. Do we actually know about a whole building? And it would be overly long, I think, and overly complicated to kind of go into that here, but you can all appreciate that. Imagine you've got one house meter for energy and it actually serves the whole building. Now imagine you've got one house meter for the common area and, a bunch of meters for tenants serving the rest of the building, and you see the problem, right? If we only know about that common meter and all we're left with is going, well, it looks like a really efficient building because it's not consuming very much. You really have to have a human moment to try to figure that out. And you can certainly use data science to give you an indication of where to ask the question. But if you have to ask a question of a human at every property and every portfolio 80,000 times, the scalability of the whole regime, it becomes called into question. So I think that's for us just one example of many. We can hit some of the other slides real quick here. I think, Ragnar, these are models that you'll probably recognize or use yourselves. These sit at the asset level. We're looking for the whole thing on the left-hand side is decision tree. It was, back to these sort of, how do we sift through lots of readings and try to figure out the ones to focus on, the ones that are okay. This is an example of how we do it, pure relative, what this called stack tree regressor, and it just says, okay, it's that fuel example. Are there patterns here that make sense? Can we detect other patterns at other like-kind buildings, at other meter types, and give this one a pass and this one a fail, if you will? On the right-hand side is very much what GRESB was doing. It's an intensity assessment. We're looking at floor areas and electric usage here, and we're just trying to find guys that don't fit the curve. And where they don't, do we have contextual information that allows us to say, okay, that makes sense. Next slide, Kalia. Similar, again, types of analysis. This one just at the portfolio level. Once we build all that up, we're just going to have an expectation for what the portfolio should look like. And again, statistics, do you fit the curve? Are you meaningfully above or below it? And in fact, then are we concerned, right? So these are just the types of different analyses. I think we got maybe one more, or is that it for us? So let's go to the last slide. I think, Ragnar, we're down to our sort of, how are we doing here? About 15, a little less than 15 minutes. We have a number of questions. So before we, I think, turn to those, Kalia, I'd like to just ask Ragnar just some questions of my own. We went through today, Ragnar, why this stuff matters. Well, real investment decisions, real lending decisions, and real estate transaction and occupancy decisions are starting to be made around ESG. And if we don't trust the data, those decisions can't be made or can't be made well. right? So that's why this stuff matters. Then we looked into, well, how does it actually work, right? What data are we talking about? And then importantly, how do we think about the quality of that data up to and including what's material? So that was an interesting discussion. And to kind of like lead us into some of these questions from the audience, what do you think is next, Ragnar? How do you think data quality improves? Where do you think GRESB is taking it? Maybe just some thoughts on that idea.
Sure. So yeah, I think there are going to be a few parallel conversations that we have to have. So you mentioned data coverage. We have to, we at GRESB, for example, we don't provide energy intensity metrics back to our respondents or to their investors unless there is 100% data coverage because of exactly that problem. We don't want to make an inaccurate statement about the part of the building that we don't know about. So unless we know that the respondent reports for 100% of the floor area of the building, we won't provide that. So that's, I think, the first conversation that we have to push. How can we get companies, or how can we help companies to collect that data? And there are all kinds of dimensions to even that conversation. And we think about tenant data and regulations in some countries. And then there are other conversations about, okay, now that data that we are able to collect, what are the dimensions of quality that we assess? And I think in the next year or a few years, we will progress together as an industry, and that's why I really like that we're having this conversation today to figure out standards around this concept. So figure out not only standards around what is good performance, but also what constitutes good data. And yeah, with that, I think we should just take some questions, unless Matt, you would like to add anything.
I think Kaylee, you've got one of the questions queued up here. Go ahead. Sure.
So one of the attendees asked, when you speak about measuring and benchmarking, the E part is pretty standard, but can you please speak to the S and G parts? What are you seeing from companies, and how are these areas impacting or qualifying a better investment in the building?
Right, I think that's a great one for you. Can you talk about what are you measuring around S and G, and how do you see that impacting the asset value, portfolio value?
Of course. So, well, I can't make any statements about the impact on the asset value, but I can tell you what we look at. So, the E part, it's the most straightforward, right? We just collect that. That's real things. That's physical things that we consume, that we produce. The S and G parts are more abstract, and that's why they're also harder to connect directly to the asset. We generally don't collect this kind of information, at least for now, on the asset level, because most of these data points and most of these things that companies do to improve those dimensions are done organization-wide. So we look at stakeholder engagement, investment decision practices. Stakeholder engagement is actually the largest part of the S component in our assessment, where we look at the community around the building, the tenants, the supply chain. So all of these aspects, they are coming right now from the organization level, from the policy and the management level. But ultimately, we I think can look also at the asset level. Was there something this year that has been done on a particular asset that helped the community around the asset improve in certain ways that we have defined? So those indicators that we now measure on the organization level, I think we're going to have a conversation about how we will measure them on the asset level ultimately. I'm just curious, Matt, in your platform right now, because our systems are connected in a way that you can stream all that performance data to us. Do you collect any of those social indicators currently?
Some of the stuff, Ragnar, I think the tenant engagement, occupant engagement stuff would fall under the S. Is that correct?
Yes.
Yeah. So that's obviously done and has to get rolled up from the asset level. So you'll see certain buildings doing it, right? Surveying tenants or rolling out recycling and education programs, for example. That's going to go at the asset level in our system, and then it's going to get aggregated for purposes of portfolio level reporting. You're absolutely right that a lot of the G governance and policy, management policy aspects just sit at the entity level. What's interesting there is for multi-fund managers, these funds, as you know, these funds are different vehicles, closed and open, separate accounts, and consequently, if you have a multi-fund manager, say PGIM, it almost works at two levels, where you might have a true global approach to certain key sustainability practices around G and to some extent S, right? But then you get down to the funds and you'll find variability. And there's a good reason for that, which is the fund has a specific investment criteria or purpose, and therefore it needs to have some tailoring, right? So that there's actually another split we should have probably made a statement on earlier, which is that you've got, believe it or not, you've got an entity, you've got funds. If it's a fund, asset management type entity, you start to get variability around policies, procedures, certainly assets there. Then you go to the asset, then you go down to the meters, and I'd be more than happy to say that yes, in fact, you would go ultimately behind the meter and into the systems. And that concept is a concept we call just the data chain of custody, right? What is the data chain of custody? Where does it start? Where does it end? In Measurabl's world, we say meter to market. We say it starts at the meter and it ends with the market, which is the capital markets or the counterparties doing deals. So I digress there, Ragnar, but the short of it is some is at the asset, most is still at the entity. And by entity, I really mean fund and then overall ownership.
I'd like to just add quickly, I think one of the key questions is like, where is the meter just in an abstract way for some of these issues? And I think, we also have to have a conversation when it gets to asset level. What are external factors that influence these? If we think about child labor, that's a very specific topic that needs to be addressed in certain markets, where we can have a meter that measures the risk exposure as measured by a risk index, for example. And then what we want to measure is really what are the systems and procedures in place to help prevent that the asset affects any of these things. So these things are definitely more difficult to measure and to make concrete and quantifiable. So I think that's a separate conversation that we will have at some point.
Mm-hmm. There's another question here, which was kind of dovetails there, which was starting to get into the health and wellness side of buildings. And the individual made the comment, they say, it looks increasingly that it is the health and wellness of the occupants that really can drive asset value, because tenants desire buildings that create superior performance from their employees. Makes total sense. And you've seen standards like Fitwell and Well focusing on these issues, that maybe it's less about the building and more about the people in the building. And then the question went on to say, if that's the case, how do you measure that, right? And are there data quality problems there? And I'm aware of, the wellness phenomena, resilience really after that. These are the newer flavors of ESG sustainability. In my opinion, we're still, I think, very much trying to deal with ESG. And the industry is now turning its attention to, but I think very, very early days in health and wellness and resilience. And when it comes to wellness, one of the key things is indoor air quality. And one of the prerequisites for well, at least that I'm aware of, is measurement of that. And that means some sensor, something. Turns out that you have to picture an office tower, it's 20 stories, and you got to picture all sorts of different uses. In one building in particular that I went into, you had a WeWork. WeWork is a highly dense environment. And other floors, you had a big open common lobby, and you have, administrative services and general office. And the monitoring was only taking place in the lobby. The problem there, right? It's kind of back to our data coverage problem. Problem is that indoor air quality there indicative of the actual usage of the building in other areas. So I think to answer the user's questions is it's fraught, it's early, and after that, I don't know.
It's interesting, right? It's like to a certain degree also indoor air quality is totally objective up to a certain point, but then it becomes also a subjective thing. The same counts for temperature in a building. So we also need to ask the people that are in the building, right? We could imagine having these data points flow into the systems as well, and not just say, well, we define 22 degrees Celsius, something like 70 degrees Fahrenheit as the nice temperature, but no, we need to ask the people that are experiencing it.
Definitely. And unfortunately, we're coming up on the hour here, so we have one last question before we wrap up. Why now? Why is investment grade ESG becoming a topic now? Why are we having this discussion? What's catalyzing the shift to investment grade?
Well, oh man, Ragnar, I'll take a quick run at it and then hand it to you to close us out. I don't know, just a few months ago at this point, gentleman by the name of Larry Fink put out a public letter. Larry is the CEO of BlackRock, the world's largest asset manager. And I don't mean to pick on them. They're not in isolation. In fact, there's quite a few institutions that were earlier movers in this, CalPERS, among others. But basically the letter said, we care. We believe that ESG, that CSR, that sustainability is indicative of superior risk-adjusted returns, emphasis on risk-adjusted return, and we're going to be hunting for it. And if you want our money, you better be measuring, managing, and reporting critically on this information. And we just have to look at that and say, perhaps that is at least a milestone, a watershed moment where you're seeing the capital markets reward through lower cost of capital and loans, or higher or preferred access to capital equity when you manage this stuff well. So I think the short answer is the time has come because investors are using it to drive their decision making, and they're being sort of out and visible and vocal about that. Ragnar, what do you think?
Yeah, I think we've gone pretty much full circle here. It's in the end because it matters to the investor. And I don't think that the term investment grade, I mean, we're talking about data quality. I think the term has been floating around the GRESB office at least for a while now, with conversations with all kinds of other stakeholders in the market. It's just important that we define what are the boundaries of good data, of good performance, and so we can serve exactly the purpose that BlackRock defines as one of the leading things that drive them. And yeah, that's pretty much where we started in the beginning, right?
Ragnar, thank you very much. I hope everyone enjoyed today's presentation. This is a special opportunity here from one of the guys that really thinks the deepest and hardest and deals with the data on a day-to-day basis. So thank you. And we will record this. Maybe you can close us out.
Definitely. So again, thank you everyone for participating. Thank you, Ragnar and Matt, for providing your thoughts and for really thinking about where the industry is headed with all of these topics that we've discussed: the data quality, the data integrity, where ESG is taking us, and where all of the audience members can be prepared for the future. So again, we're recording this. We'll send it out later today. So stay tuned for that. And with that, enjoy the rest of your day, guys.
Bye-bye.
Thanks. Bye-bye.